What's happening, my venture capital trailblazers? Welcome back to another episode of the Do.Different.Better Show, where we talk about wealth, wisdom, and money moves, making finance simple for everyday people. I'm your host, Elaine Rasmussen, CEO and founder of Social Impact Now, Connect Up Institute, and managing director of the Integrated Capital Fund. Today, we are diving into a topic that's not just trending, it is setting the stage for the future of accessing capital for businesses. This episode, lawsuits, lobbying, and the future of venture capital for women and underestimated communities. That's what we're talking about today. The world of venture capital has been a long gated community, and we're here to discuss how to tear down those gates and build pathways for underrepresented communities to thrive. But before we dive in, I want to give you a quick backdrop for what we're discussing today. We're going to be talking about some things that you may have heard about in the news, but I'm going to try to make it a little easier to digest and clear about like what happened and what didn't happen. So the Fearless Fund, which is a venture capital firm dedicated to supporting women of color entrepreneurs, faced some legal challenges over its Strivers Grant contest, which awarded $20,000 grants exclusively to Black women-owned businesses. The American Alliance for Equal Rights, AAER, led by conservative activist Edward Blum, filed a lawsuit alleging that the program violated Section 1981 of the Civil Rights Act of 1866, which prohibits racial discrimination in contracting. The whole premise was that the grant that was given, there was a contract, meaning that folks had to sign a contract in order to get that grant. And that was pretty much the crux of the case, was that it wasn't necessarily about a grant program, but that the fact that there was a contract between the organization, or a quid pro quo, getting something for something, that was between the person receiving the grant and the organization giving the grant. Here are some of the recent developments that have come out of the case. So on June 3rd, last summer, the U.S. Court of Appeals for the 11th Circuit issued a preliminary injunction halting the Strivers Grant contest. The court found that the program was likely in violation of the federal law due to its race-based eligibility criteria. What that means is they didn't stop the case, but what they were saying is that, no, we think that you have enough here to question whether or not there is something wrong with how this program works. In September 11th of 2024, Fearless Fund settled the lawsuit by agreeing to permanently discontinue the Strivers Grant contest. Not all of their activities, just this particular initiative, which was the initiative that was under scrutiny with this lawsuit. This decision was influenced by the legal challenges and the current judicial climate regarding race-conscious initiatives, as our Supreme Court and other courts in the appeal circuit are becoming more conservative and less likely to support these types of initiatives. They sort of saw the writing on the wall and decided to settle. That does not mean that one side won or lost. It is exactly what it sounds like. Both parties agreed to a disclosed or undisclosed set of parameters, right? So as of the settlement on September 11th in 2024, there are no outstanding motions for this case. The settlement actually concluded the legal proceedings between AAER and the Fearless Fund. So unless one or both of those organizations decides to go and pursue a new lawsuit, the case has been closed around this particular issue for the moment. Now, given the successful challenge against the Fearless Fund grant program, meaning that the fact that it had actually gone to the Court of Appeals and it was not settled in the lower courts, it's anticipated that Edward Blum and the AAER or other similar organizations may pursue other legal actions against other organizations that have race-conscious programs. So some of their strategies may include identifying and challenging similar programs, meaning that they are going to target other grant programs, fellowships, or initiatives that have eligibility criteria based on race, arguing that they violate federal anti-discrimination laws. They may also leverage recent legal precedents like the for the previous court, the lower court ruling, such as the 11th Circuit's decision in the Fearless Fund case, to bolster arguments and new lawsuits against race-conscious initiatives. The last thing may be advocating for policy changes. So they may engage in lobbying efforts to influence legislation or corporate policies aiming to eliminate race-based or ethnic group-based considerations in a variety of different kinds of programs. Organizations with diversity-focused programs should be aware of this evolving legal landscape and may need to reevaluate their initiatives and more the language of the initiatives and how they execute the initiatives to ensure compliance with the current laws and to withstand any potential legal challenges, especially if the organization is a smaller organization. Legal fees can be very, very expensive. I have been through several and they are not fun. So while this case was focused on an organization that was focused primarily on the Black community, it could also be leveraged against other ethnic groups in a variety of economic areas where there is a targeted effort to undo some sort of systemic discrimination. So you may be asking yourself, Elaine, why is this even important to know? Well, let's start off with some cold, hard facts. Did you know that in 2022, women-led startups received just 2.1% of venture capital funding in the United States? 2%. That's 2 out of 100. If you're a Black or Latino entrepreneur, those numbers are even smaller. Less than 1% of venture capital goes to founders from these communities. I think in 2018, there was a Vogue fold-out cover that had, I believe it was 18 women, Black women, who were the only women historically that had received over $1 million in venture capital funding into their business, meaning all the women throughout time who were still alive, who had received over $1 million in venture capital funding, could all fit on a magazine cover. So these are some of the things that some of these programs are trying to do. They're actually trying to stimulate and motivate more folks who are not necessarily the folks that we see normally getting venture capital to start these businesses that can access venture capital, that can grow, provide jobs, be community builders in wherever their communities are. But these numbers really reflect systemic barriers that are baked into the venture capital system for decades. But here's the thing. Underrepresented founders are building innovative, profitable businesses. In fact, studies show that women-led companies generate higher revenue per dollar invested than their male counterparts. This number increases when the business is led by a woman of color. So here's a stat that might blow your mind. According to the American Express Small Business Report, Black and Latino women for the past decade have been the fastest growing group of entrepreneurs in America, yet they receive a microscopic portion of venture capital and even angel capital dollars. Imagine the untapped potential of these businesses being able to grow, contribute to the tax base, be employment centers. Really, when companies grow, they give back to their community. So small businesses are really the backbone of a lot of our different communities, no matter whether they're in rural communities, they're in urban communities, or tribal communities. So now let's bring it all into place. So to understand where we are today, let's really look at some of the pivotal players and the other cases that are shaping up this space. So I just talked about the Fearless Fund, which is a venture capital fund dedicated to investing in women of color. They were in this lawsuit with Edward Blum, the same man who led the case that overturned the affirmative action in higher education. Blum is now targeting diversity-focused programs, arguing that they discriminate against other groups, particularly white people and particularly white males. The Fearless Fund's grant program was for women of colors, and similar programs are seen as being under attack. While there was a settlement, this could be seen that Blum's lawsuit was successful, seeing that Fearless Fund did actually end the program. However, it could also be a precedent that limits any fund prioritizing any underrepresented group. And that's a potential game changer and potentially not in the best way if we're looking at building up whole communities. But this isn't just about one fund. It's really about whether the systemic efforts to, if there are systemic efforts to level the playing field, will they survive in the legal environment that's becoming increasingly skeptical of the initiatives focused on supporting people and communities that have been left on the sidelines in accessing capital to grow their businesses? But there are some broader implications. If diversity focused funding is restricted, how will that impact other initiatives like Google's Black Founders Fund and Goldman Sachs' commitment to investing in women led businesses? I believe they have their 10,000 women small businesses. This could really create a chill in corporate and venture capital support for inclusive programs. So now let's take a switch and let's talk about lobbying. Because if there's one thing we know about policy change is that money talks. There's a great movement of advocacy groups like Black VC and All Rise working to pressure lawmakers and VC firms to implement equity-focused policies. And that can run the gamut, whether it's queer equity, women, gender equity, racial equity. There's a variety of folks that are working on a variety of different ways to bring equity into investments, particularly venture capital. But there's also opposition. There's big money that's being funneled into lobbying against these efforts. So what does it look like in practice? There's some really progressive venture capital funds like Kapoor Capital that are setting examples by publishing their diversity metrics and pushing out systemic change and pushing for systemic change. Meanwhile, larger organizations are lobbying to maintain the status quo and arguing that allocating funds based on merit, not demographics, is the way forward. But there is a case that can be made of like merit is also tied to your demographics and access. So if you may be a very bright and intelligent person, but if you are living in a community that is disproportionately underinvested in their education, in sports or other things, you will not be able to demonstrate your merit to get to where you need to go. So these are the things that are the conversations or the frameworks that are coming into these conversations. But here's where you can come in. As listeners, as entrepreneurs, as an investor, you can amplify the voices calling for transparency and fairness. Write to your representatives, ask your portfolio companies about their ESG metrics, their environmental, social, and governance metrics, and don't underestimate the power of collective action. But once again, let's talk about why this might matter to you, especially if you're a woman-owned business or a person of color or a rural-based business. I'm going to break it down for you. First, venture capital isn't just about money. It's really about mentorship and connections and validation of your business and its opportunity to grow and scale. When diverse founders are excluded, meaning women, rural-based business, ethnic groups, entire communities miss out on the economic growth, contribution to the tax base, growing employment in community, particularly if there's an employment desert. Second, the systemic barriers of venture capital are a reflection of broader inequities in the economy. If we can make more venture capital more inclusive, more accessible, it can have a ripple effect of creating more jobs, which creates more innovation, which creates more generational wealth for everyone, right? So here's a practical example of a founder that I know I'm friends with. I adore this person. She's amazing and a stalwart and just a trailblazer all around. And that is Jessica Norwood, founder of Runway Capital and author of Believe in You Money. She built an alternative investment firm from the ground up, dedicated to funding underrepresented founders. Today, she's proof that the status quo can be disrupted, but it takes grit, creativity, and let's be real, money. Jessica's story shows us that change is possible, but it's not inevitable. So, okay, my trailblazers, that is it for this segment. We have set the stage for the big picture issues, the lawsuits, the lobbying, and the stakes for entrepreneurs and investors such as yourself. In the next segment, we're going to get practical. I'm going to walk you through strategies for pushing for systemic change and building resilience in the face of these challenges. Don't go anywhere. We're just getting started. And if this episode is hitting home for you, share it with somebody who might need to hear it. You're listening to Do Different Better. I'm your host, Elaine Rasmussen. Stay tuned, and I will see you after the break. Welcome back, my venture vanguards. In segment one, I laid out all the challenges and systemic barriers, the lawsuits and the lobbying wars around venture capital, particularly as a result of the Fearless Fund case. Now it's time to shift gears. This segment is really going to be about actionable strategies. Whether you're an entrepreneur, you're an investor, or an ally, there is a role for you in pushing for larger equity in venture capital. So here's the thing. Systemic problems require systemic solution. But change also starts with individuals, you, me, and every person listening to the show. So let's break this down. Let's start with the backbone of the venture capital ecosystem, which is the entrepreneurs. The reality is, underrepresented founders have to work harder and smarter to secure funding. But there are strategies that will help you stay resilient, right? So here's tip one. Build a bulletproof business case. No matter how innovative your idea is, investors want proof that it works. Build a strong business case by doing three things. One, creating a very clear, data driven pitch deck, right? It doesn't have to be long. Guy Kiyosaki says 10 slides. That should be the max to really get your story across. A clear, concisely, should not have a whole lot of words on it. Actually, the less words, the better until you get to the data portions. You want to prove that there's actually a market for this and you've done the research that demonstrates there's a market for what it is that the solution that you're providing. Next is highlighting your traction, right? Whether it's customers, partnerships, revenue growth, whatever that is, you built a prototype and you built a prototype based on just very little money or bargaining. All of those things count, right? And then finally, show how your business is scalable and solves a problem. Once I was working with a founder and she was creating a e-commerce site that was all about being a sort of e-commerce for Haitian goods, and it was focused on Haitian Americans that were living here in the United States. So she had relationships with Haitian artists and Haitian creatives and Haitian makers, and she wanted to be able to sell their goods to Haitian Americans here. So I asked her the question, I said, well, how many Haitian Americans are actually in the United States? And she didn't know the answer. And I said, well, let's go to Google. Let's go find out how many Haitian Americans are in the United States. Found out that according to Google, there are approximately 800,000 Haitian Americans in the United States. I said, let's round that up to 1 million. Now, you're not going to get all 1 million Haitian Americans to buy on your site. Law of averages, business, it's like maybe you'll capture 2 to 5% of the market, right? So if we're talking about 1 million people, we're talking about a relatively small segment of the market. And then that number goes down based on them being repeat customers. So when we think about growing a business and thinking about, okay, are you trying to grow to $1 million, $2 million, $5 million business? There isn't enough demand that's going to exist for you to build that business. So one of the things I recommended to her, I said, instead of focusing on Haitian Americans, why don't you focus on people who have traveled to Haiti, who love Haiti, or are looking for that island feel in different kinds of products? Maybe they're looking for home products, maybe they're looking for resort outfits, maybe they're like, whatever it is that you're going to be selling, sell to the larger market if you're looking for a business that's scalable, right? Because she could certainly stay a small business that is focused on catering to Haitian Americans. That is fine. There's nothing wrong with that. But however, that business will only grow to a certain level because the population is limited of who she's targeting to and who she will have access to and who will be repeat customers. So this is why it's really important to think about, is your business scalable? And to get it scalable, you may have to redirect who your market is in order to ensure its scalability. But these are the things that an investor is going to be looking for. So here's another example. Melissa Butler, who is a Detroit native and founder of the Lip Bar, she was rejected on national TV by Shark Tank judges, but she doubled down on her vision. Today, her vegan beauty brand is sold in Target stores nationwide. I actually have her lipstick on right now. I love it. It's incredible. It's amazing. If you're watching this on YouTube, you'll be able to see. But here's tip number 2. Diversify your funding sources. If traditional VC doors aren't opening, explore alternative funding types. And I did a whole show on this on another episode. So one is crowdfunding, right? Platforms like iFund Women, Start Engine allow you to raise money directly from the people who support you, your community. I always recommend don't go on a crowdfunding platform unless you have a crowd. And for every I would say for every $1,000 you want to raise, you should have 100 people in your crowd. That doesn't mean that 100 people will contribute, but the law of averages will kind of plays out that for every $1,000 you want to raise, you need 100 people in your crowd. So let's say you're trying to raise $5,000, you need 500 people in your crowd as a bare minimum to raise money from. Another thing is looking for grants for your particular kind of business. Just like there are, if you're going to college and you're looking at scholarships, my son is a veteran. He is applying to nursing school. There's going to be a lot of grants for males going into the healthcare field because there aren't a lot of males going into the healthcare field. There's also a lot of scholarships for veterans going into the healthcare field. But in this instance, Tory Burch Foundation has a grant program that is focused, I believe, on women-based businesses. And they also have, I believe, have a fellowship program. Then there's also revenue-based financing. Some investors offer capital in exchange for a percentage of future revenue, which can be less risky than equity financing, meaning that you're giving up a piece of the business. If you ever watch Shark Tank, Mr. Wonderful leverages this a lot in his deals of revenue-based financing. He's trying to get his money back plus a little extra. And the way that he's going to get his money back is at the growth and scale of the business. So for every sale that's made, he's making what's called a royalty or some sort of payback that contributes to the base of what he invested, plus a little bit more. He's charging a premium because he's basically lending his money, but on paper, it's not, it's through a different model than a standard monthly payment every month, like a standard loan would be. So here's tip number 3, leverage your network. I cannot talk about this enough. I had a founder call me last week and say, you know what? I realized I have so many influential people in my phone. I have this mayor in my phone. I have this person in my phone. I have this VP. I have this CEO in my phone. I'm like, okay, you have a very powerful network. Why haven't you leveraged that network? And sometimes it can be a difficult thing. It's you just don't know how, right? But your network is your net worth. Building relationships with mentors, accelerator programs, the people running the accelerators, investors who align with your mission. Look for programs like Google for Startups, Black Founders Exchange, but also locally, your entrepreneur ecosystem has a lot of resources. Stop trying to go it alone and be a superhero. Tap into the resources that are in their community. They're providing funding. Some of them are providing resources that are specifically for underestimated or underrepresented entrepreneurs, right? So here is a call to action. Take a moment this week to research, to research at least one alternative funding source or accelerator program that fits your business. Write it down and take that next step. If you're an investor, go and look at the entrepreneur ecosystem where you live, work, and play and see, is there a role? Is there a mentorship role that you can do? Is there an upcoming event that you can attend where you can start to understand and see what's happening in your local ecosystem and where there might be opportunities to align not only your gifts and talents, but your network as well as your capital, right? So all right, let's talk to the investors in the room. Whether you're an angel investor or you're part of a VC firm or just getting started, you actually hold the power to change venture capital. How? By intentionally aligning your portfolio with values-focused principles. This could include gender equity, racial equity, environmental, climate change, or others. I have a whole show dedicated to aligning your money with your values and how to go through that process and how to think about that and then how to take action. But here are a few tips. 1, adopt an inclusive investment practice. I always encourage people to think of an investment thesis. What is the thesis that you want to use that's going to guide how you invest and where you invest, whether it's your 401k, whether it's an investment property? What is the what and the why and the how are you planning on practicing your investing, right? But you can start by evaluating your deal flow. Ask yourself, Are you actively seeking out underrepresented founders, maybe female founders or rural-based founders? Are you addressing unconscious bias in your own decision making? If you look at your portfolio and you look at your network, does it all look exactly like you? If it does, then you are creating your own your own bubble of thought. It can be really great and satisfying to hear a different perspective and give you some insight to a world that you may have never been exposed to, which could inform how you do your work and maybe do your work better, whether it's investing, whether it's the work you do at a company, no matter what, that information causes a ripple effect, right? Are you leveraging platforms like the Connect Up Integrated Capital Fund, Runway Capital, Urbane Development, Black VC, or All Rise to find diverse talent, right? So this is just one thing. Tip number 2, advocate for transparency, right? Push for VCs to publish diversity metrics just like Kapor Capital. Transparency drives accountability and accountability drives change. Tip number 3, be a champion for change. Use your influence to mentor and amplify underrepresented founders. Remember, it's not just about writing checks, it's about opening doors. So consider me. In 2022, I created the Integrated Capital Fund after 8 years of research, digging, meeting people, connecting, and networking. And the mission of the fund is to fund the underfunded. So we focused on rural-based businesses and other underestimated communities. I did not wait for the change to happen. I built the change myself, right? But what I would say to you is, well, maybe you don't have time to create an investment fund, or maybe you have an investment fund, but you're already part of the privileged few. I would encourage you to work with an organization that is not a part of the privileged few and help them grow their fund, right? There are a number of folks. If you want to know, there's a transformative 25 list of, I believe it's now 75 alternative funds that are looking to do similar work. They are always looking for investors. So leverage your network and your net worth to invest in these, open up your network, drive people to those funds. There's also the Boston Impact Initiative fellowship. I believe they have about 20 founders that are capital entrepreneurs that have created alternative funds. They're all raising capital as well. So leverage your network to connect with these folks and drive your capital and your network's capital to these folks instead of creating your own capital fund. There are plenty of folks that are doing great, and I'm sure there is something out there that aligns with your values. Okay. Finally, let's talk about allies and organizations supporting the entrepreneur ecosystem. Your role is critical in advocating for equity, educating stakeholders, and providing resources. So here's a couple of tips for you all. 1, advocate for policy change. Support initiatives that push for diversity in venture capital, like lobbying for tax incentives, inclusive funds, or advocating against harmful lawsuits like the one targeting the Fearless Fund. 2, educate and empower founders. Offer workshops and mentorship programs and networking events that are tailored to underrepresented entrepreneurs. Knowledge is power, and access to resources can make all the difference in the world. Organizations like Connect Up Institute, the Association for Enterprise Opportunity, Just Economy Institute, Impact Finance, and Boston Impact Initiative are all doing incredible work in this space. They provide everything from mentorship to funding opportunities and all the things in between. Tip number 3, use your voice. Social media, conferences, and blogs are powerful tools for amplifying the stories of underrepresented founders and underrepresented capital entrepreneurs that are building funds to service these folks. Share their successes, highlight their challenges, and advocate for change. Tag other people, especially in your network, that you think should know about them, who could have the potential to share their network and their net worth with these organizations. Most of them are nonprofits, and they are looking for support, particularly as entrepreneurship funding for just organizations that are supporting entrepreneurs is shrinking nationwide. So, and we don't want that. Okay. So, that was a lot. We've covered so much. We've covered strategies for entrepreneurs, strategies for investors, and strategies for allies to push for systemic change and build resilience. In the next segment, our final segment of the day, we're going to be looking ahead. What does the future of venture capital look like for women, rural based business, and people of color led founders? And how can we ensure progress doesn't stall? You're listening to Do Different Better. I'm your host, Elaine Rasmussen. Don't forget to subscribe, leave a review, and share it with someone who needs to hear this. Stay tuned, and I will see you after the break.
Yeah.
Welcome back, my fearless financiers. In this final segment, we're putting on our visionary hats. What does the future hold for venture capital and its commitment, or lack thereof, to women and people of color and rural based businesses? More importantly, what role can we all play to ensure progress moves forward and doesn't get derailed? Here's the thing. The fight for equity isn't just about navigating the current landscape. It's about shaping what comes next. It's about holding the system accountable while reimagining what's possible. So let's dig into some challenges, some opportunities, and solutions that could define the future of venture capital. So, what are some of the roadblocks? Let's start with a reality check. Even with the increased attention on gender and racial equity, significant roadblocks remain. So, what are we up against? Challenge number one: legal battles and policy resistance. We talked earlier about the Fearless Fund lawsuit and the ripple effect that it could have. It courts the side with if the courts side with these challenges, we risk losing funding programs specially designed for underrepresented founders. Policies supporting equity need to be defended and expanded, right? So the other side of this is who will be next, right? There's that famous quote of like, they came for these set of folks and I stood still. Like they came for these set of folks and I didn't do anything. They came for these set of folks and I didn't do anything. Eventually they came for me, right? So when we think about these policies, to what end does this happen, right? And we're already starting to see what is argued as the unraveling of equal rights, equal pay, particularly as it relates to women. And so wanting to be understanding that these can be looked at as wedge issues that then open the door for continuous rolling back of some of the progress that we've made in creating our communities whole. So, challenge number two: limited representation in decision making roles. I talked about less than 2% of VC firms are led by Black and Brown people, and the numbers for women and other ethnic groups isn't much better. Without diversity at the decision making table, systemic change will be slow and non existent. So, I'm hoping one of the reasons why I did this show is I was hoping that I would inspire people to get into finance by making it by showing how approachable it can be. It doesn't have to be this thing that's purposely made opaque so that people don't know and they're afraid to inquire. It's sort of that wizard behind the curtain in the Wizard of Oz or Wicked. And so really getting people to really pull back the curtain on finance and tell people that there's a pathway and could be a career. It's a viable career. I've loved working in finance. It hasn't always been easy, but what career is. And I really hope that folks to get inspired through their own investment journey to possibly either one, engage in the finance system or become a part of the finance system and be a decision maker, particularly if you have been systemically left out of the finance system. So challenge number three: market fluctuations and funding opportunities. In economic downturns or uncertain markets, there's often a retreat to safe investments, which historically has meant prioritizing already privileged groups. This backslide is a threat, and we need to anticipate it and counteract it actively. So remember in the 2008 financial crisis, during that time, funding minority-led ventures dropped dramatically as VCs doubled down in their existing networks. We can't let history repeat itself, right? Number two, there are opportunities for transformation in building a future that works for all of us. Okay, so we've already talked about the challenges. Now let's talk about some of the solution. There's momentum for change and we can capitalize on it if we are strategic. So here are three opportunities. First is leveraging technology for equity. Digital platforms like crowdfunding sites, blockchain technology, online pitch competitions are leveling the playing field and making access more available to more people, no matter where they are. There are tools like iFund Women, Republic, Seed Invest that allow underrepresented and founders to bypass the traditional venture capital gatekeeping and connect directly with investors. There's also local angel groups in your own community that you can tap into. Excuse me. Opportunity number two, increasing representation in venture capital firms. Organizations like All Rise and Black VC are doing the hard work of diversifying the venture capital system. Um, and there are organizations like Boston Impact Initiative and Just Economy Institute that are supporting the development of capital entrepreneurs, whether they're going into the VC realm, excuse me, the VC realm or alternative capital realm. They're giving them the tools, the resources, the mentoring, and the network and the connections to be able to launch these alternative funds or venture funds that have a particular equity focus, whether that's environment equity, gender equity, racial equity, whatever your flavor of that you're looking for. But they're supporting initiatives that mentor and place underrepresented individuals in venture capital roles while building a pipeline of diverse decision makers. Opportunity number three, expanding corporate responsibility. Big corporations like Google, Salesforce, and PayPal have pledged billions for diversity, inclusion, and entrepreneurship. These commitments are game changers, but we must hold these companies accountable to their promises, asking them how to report on what has happened since you made this pledge, what traction has been made, what traction hasn't been made, what do they feel that they need to make better traction so that they can hit the metrics that they have outlined for themselves. Remember when Netflix pledged $100 million to support Black-owned banks and institutions? That was the kind of bold action that we need, as it sets a precedence for others to follow. So here's a tip for my listeners. If you're a founder or a small business owner, don't hesitate to tap into these corporate programs. Research grants and partnerships and accelerator opportunities offered by these companies, particularly if these companies are headquartered in your community. I live in Minnesota. We have about, I think, 16 Fortune 500 companies. We have another set of Fortune 1000 companies. You can get a public list of all those companies listed, or put in Google Fortune 5,000 companies that are in my community, and then Google those companies and see, which of these companies has a entrepreneurship adjacent program, whether it be mentoring, funding, sponsoring, whatever the case may be. So this isn't as hard as it is. It's tedious. I will tell you that for sure. It takes time and it takes energy and it takes effort. But if you dedicated a little bit of time every week you're going to research one organization, you're going to research one program, pretty soon over time, you will have built up a war chest of information that will help you take advantage of some opportunities. And you can and spread that information to others, right? Don't keep it a secret. So, number three, what is your role in the future, in shaping the future? So let's bring this all home. The future of venture capital for women and underestimated communities like rural-based businesses, ethnic-led businesses isn't just about what the courts decide or what VCs choose to prioritize. It's about collective action, what each of us can do to drive change. So for entrepreneurs, keep innovating, but also keep documenting your journey. Every success story builds the case for why diverse founders deserve a seat at the table. Share your wins and losses. It's all about data that advocates for you and can be used to push for systemic reform. For investors, be intentional. Don't just write checks. Demand transparency from the firms that you work with and work in. Ask how you're incorporating these sort of equity perspectives into the portfolios of your own portfolio or the portfolio of the companies that you work for, and prioritize funds that align with those values. Once again, if you have a gender equity, you are really looking for equality and equity with women, with investing in businesses that are led by women. If you're really interested in investing in rural-based businesses or third-ring suburb businesses or tribal businesses or native-owned businesses, there are people who can help you figure that out. For allies and advocates, advocate for policy change and share the stories of underrepresented founders. Use your voice, your network, your resources to amplify the movement. Post on LinkedIn, post on your Instagram. We had a founder this year who went through one of our accelerator programs, got on Oprah Winfrey's list of favorite things. Charles Lovejoy brand. It's amazing. He's got a series of rubs. He's got Bloody Mary mixes. I don't particularly drink Bloody Marys, but he also has some other food items that I think that you'll enjoy. And in a short span of 6 months, he was able to finish our program and get onto her list. So it's an amazing story that we're going to talk more about at our conference coming up in April. Maybe I'll see you there. But I want you all to know, like, these are just some of the things that you want to think about, and looking around, deciding with your dollars where you actually spend your money, but tapping into your local entrepreneurship community, finding out what's going on, what's not going on. What I was asked a question, I was talking with somebody from Allianz yesterday, and they were asking me with our organization, Connective Institute, and our Integrated Capital Fund, what were some of the headwinds that I was seeing as far as the work growing and expanding and being sustainable. And I was talking to him about, well, what we know is that funding for entrepreneurship, like in the United States, is shrinking. Our local ecosystem is shrinking. We acquired a nonprofit 2 years ago. We acquired Lunar Startups about a year and a half ago. We are in negotiations to acquire another entrepreneur support organization, just because they don't have the funding to sustain themselves. And so we're starting to see this consolidation as a result of the funding shrinking, right? I think with COVID, there was a big boost to support entrepreneurship. And now we've kind of moved on to our next disaster in waiting. I don't know what that disaster is, but so there's been a retreat in funding for entrepreneurship work and organizations supporting entrepreneurship, and alternative to the traditional venture capital model, which we need more of. Then we need more venture capital funds. So if you're really interested in focusing on building up your community, wherever that community is, you really want to see small businesses thrive. It's not going to be at the venture capital level. Venture capital is really for those businesses that are on track to be multi-million-dollar and even billion-dollar businesses, particularly businesses that are focused on tech. But your local, bread maker who maybe is looking to have a couple of shops, your local designer who's looking maybe to put out a design brand, while that business may grow to a multi-million-dollar business, that business has to get over what we like to call the valley of death, which is year 3 to year 10, right? Those are the most critical times for a business. And if we are losing our entrepreneur support organizations, we're losing the organizations that can create what Jessica Norwood calls believe in you money, that I'm going to believe in you because you've shown some grit, you've shown some stamina, you've shown some traction, and I'm going to give you this money to get you to the next platform or the next stage of development. That is critically needed. One of the analogies that I like to use in our ecosystem is, and I don't think our ecosystem is unique in this, they provide a lot of resources. To use a baseball analogy, they have a lot of resources that get you from home plate to first base, right? If you have an idea on the back of the napkin, if you're just starting out, there's some great startup organizations to help you get going. And once again, that's not just in Minnesota, that's in a lot of other places. I travel around the country and I see it everywhere. So really great at getting you to first base. And they have lots of resources if you're already on third base. This is where sort of venture capital starts to come in. This is where your larger investments, $500,000, $1 million investments start to happen. But what's missing in a lot of ecosystem is, how do entrepreneurs get from first to second and second to third? And that really has to do with getting the money to be able to create the infrastructure that creates sustainability, the infrastructure that helps them streamline and scale and create efficiencies in the business. And if people, money, and resources are not available at that critical time of the businesses, that is when the businesses close. So we see that all the time. And like I've already talked about, small businesses is what drives your community wealth. It is what drives your community tax base. It is what drives. And when we talk about small business, let me be clear, we're using the Small Business Association definition of a small business. And their definition is, if I remember correctly, is a business generating less than $10 million. Now, $10 million may seem like a lot of money, and it is a lot of money, but think about all the businesses in your neighborhood, look around, that are probably generating less than $10 million business. That's a lot of businesses. So once again, this is why this access to capital, particularly at the most critical time, but not just capital, but information, resources, mentoring, commerce, connections, they're so important at that first to second base and second base to third base. So really think about, what can I do? What can I leverage? Do I have skills? Do I have talent? Do I have a network? Do I have capital that I can leverage to be a part of this system, right? So listeners, thanks for, here's your challenge for the week. Take action, research a crowdfunding platform, find a minority-led venture to support, talk to your financial advisor. But I really want you to really focus on change. The future of venture capital doesn't belong to the status quo. It belongs to those willing to challenge and innovate and push boundaries. That's it for today's episode of Do Different Better. If you found this conversation meaningful, subscribe, leave a review, and share it with somebody who's ready to make a difference. If you found this conversation meaningful, subscribe and leave a review and share it with someone ready to make a difference. Until next time, let's do different better together.